Hi folks, in today's video we're going to be talking about my Trading 212 portfolio update along with my investments in Vanguard. It's the last one of the financial year before everything moves to Trading 212. As we go forward into the next financial year, I'm pretty excited about trying out Trading 212's ISAs options. As I say, last update of the financial year, here we go. I'm David from prettypenny.club. I make videos to help you reach your financial goals with content on investing, passive income, side hustles, generally trying to make your money work harder for you. Subscribe if that sounds good to you. So the channel just went through 4,000 subscribers this week. Thank you to everybody who is subscribing, watching these videos, liking, sharing, commenting below. I really appreciate your support. If this is the kind of content you are interested in seeing more of, definitely let me know in the comments below. We know what we're all here for. Trading 212 update, let's just get straight into it. So just on the home screen here of Trading 212, you can see that that account here is worth about 7,500 odd pounds, with about 7,187 of that currently invested in assets. All in all, this is working out at around about a 3.5% return on the money. That is a 3.5% return on what I have invested at the moment. It doesn't take into consideration anything that I have sold, free shares, dividends, all that kind of stuff. We're going to get into that a little bit further in the video. Anyone who has been following this channel for any length of time at all will probably know that I'm going to move my ISA for the next financial year into Trading 212. For that reason, activity has been a little bit low this month. I've only really bought and sold a couple of positions, so why don't we just get those out of the way right now. The first thing I did this month was sell my entire holding in Lloyds Banking. I sold them for an ever so slight profit in the end once they got back up to the green. I was quite happy to shed these guys. Definitely, as I've said before in other videos, I am looking to bring the majority of my investing into ETFs and index funds. Lloyds has been a bit of a weight around my neck for the past few months, up to a year now. To be honest, I'm quite happy to be shot of them, and as soon as they turned green, that was the move to sell. So for all 485 shares there, sold for about 41.66 pence each. Slight profit, we move on. The only other activity I had this month was to buy another 6 shares of Palantir as they continued to drop. Palantir is one that I really think has a chance of something quite incredible over the next 5 to 10 years. One of the reasons for this slump could have been that there was a lockup release on all the early investors' shares, so as the lockup expired and those early investors were able to sell their shares, a lot of them decided to realise those profits, and there's absolutely nothing wrong with that, but it does result in a flood of shares to the market and ultimately will drive down the price a little bit. A lot of the stuff I have been reading about Palantir, and certainly the noises coming out of the folks who would use their software in the data processing industry, are saying that this has got real potential to be something pretty phenomenal over the next 5 to 10 years. Everything I've read, all the research that I've done has certainly convinced me that that's the case. So while these prices are as low as they are now, I'm definitely going to be trying to add to my position in Palantir. I'm not really in for hype, but it's one of these stocks and shares that I reckon could be comfortably 3 figures in around about 5 to 10 years, and it's definitely something for the long term. In the near term, it's probably going to see a lot more ups and downs, a bit like the rest of the market. But listen, it's a long-term game for me. I'm happy to hold Palantir, very excited that I can still buy this company at these kinds of prices. So 6 more shares added for me at $23 brings my average price down to about $25.98. So next up, a few dividends to talk about. Microsoft paid a dividend, Unilever paid a dividend, Persimmon paid a dividend, and AstraZeneca paid a dividend. AstraZeneca is a funny one. I only held that share for a couple of days. It was a free one and I almost immediately sold it. But in the time that I had it, it must have passed the ex-dividend date. As a result, I pick up a bonus £2.75 for nothing, really. It's a bit of an odd one. It's just the way dividends work. It's all about the timing for dividends, I suppose. Happy to take an extra £2.75 on that share. So £16.79 paid out by companies I would have been happy to hold anyway. Not bad for a little bit of extra cash. Let's just take a run down the portfolio here to see what I've got now. So we'll start at the top, not a bad place to be. Ads with Amazon. So these shares have seen a bit of a pickup recently again. We're up to 7.28% there. I love Amazon. I've talked about this lots and lots of times. Whether or not you actually think Amazon are any good for this planet, for people, whatever, that's a conversation for another time. But in terms of being a money-making machine, I don't think you can argue against them. The fingers in so many pies, their retail shops, their cloud computing offerings, they're getting into vehicles, they're getting into space travel, so much stuff going on, and a good companies to invest in are ones that don't limit their income stream to one particular source. Amazon are definitely wide-ranging. I am happy to hold my position in Amazon here. Avast, a tech company in the cybersecurity space, suffering a little bit at the moment, as is most of tech sector at the moment. I'd be happy enough to add some more shares to my Avast holding. So Avast would be responsible for something like AVG antivirus. A lot of people install that on their computers to protect themselves. Cybersecurity is going to be a big thing going forward, I think, particularly in a post-pandemic world where there is a lot more emphasis on networking and computers and working from home and all these different things that we're probably going to have to deal with going forward. I think they're in a good position to make some money and to help in that area. Coca-Cola is Coca-Cola. They're around for a long time, I'm sure. Their price has taken a bit of a boost recently. They pay a half-decent dividend. Happy to hold 16 shares in Coca-Cola. GlaxoSmithKline, GSK, bit Marmite these days with investors. A lot of people think they're maybe on the way out, or at least there could be money better deployed in different places. That is probably true. They're on for a split in the company in the next sort of 18 to 24 months. It'll be very interesting to see what happens to the share price. As for now, I'm happy to hold on to these guys in the meantime. iShares Electric Vehicles ETF. There's nothing more I can say about electric vehicles. They're on their way, they're coming. All the manufacturers are starting to get on board. I suspect that this particular ETF will diversify as more manufacturers jump on. At the moment, there's quite a heavy reliance on Tesla. So if you're already invested in Tesla, then this one may not be particularly for you. But in terms of getting a broad hold of the market, I'm delighted with this ETF, and you can see it's performing quite well. iShares Global Clean Energy. It's another that's suffered as of late, but clean energy is very much here to stay. This isn't something I'm concerned about, this drop. In fact, it just represents probably a buying opportunity for me to hoover up more of these shares. Clean energy is definitely the future. This is definitely a sector I want to stay involved in. Happy to hold these shares. Legal & General doing remarkably well as far as I'm concerned. That is a bit of a surprise. I didn't expect that kind of gain. They're back paying their dividend as well, which makes them even more attractive, which has probably contributed a little bit to their boost in their share price. And Luckin Coffee. Just when you think they're doomed, they rise just a little bit and they keep you hanging on. To be honest, I'm probably going to sell them. I feel like I say that every month, but I feel like my £26 there could be deployed better somewhere else. They probably won't make the leap to the ISA. In fact, almost certainly not. So we'll see what happens with them in the next month. Microsoft doing pretty well, even given the circumstances with the tech industry at the minute. They are paying a very small dividend, but that's not why we're here. We're here for their cloud computing offerings. We're here because they're Microsoft. They're in every home. They're on every Windows PC. You know, they're here to stay, and I still think they've got plenty of growth in them. National Grid. I love National Grid. Another healthy dividend. They're down a little bit at the moment for me, but they're not going anywhere either. They may have a few bumps coming up with the regulators, but I'm happy to hold these shares. That would be another one I'd be quite happy to add to as well, actually. Palantir we talked about earlier in this video. Persimmon, they paid a nice dividend this month, and again, they're getting closer to green. They have touched green a couple of times in the past 4 weeks or so. We're really hoping this infrastructure boost is going to come along once we get the worst of this pandemic over us, whenever that may be. Renewables Infrastructure Group, another company in the clean energy space I'm very interested in. Unilever is a household name and a staple, probably in the UK investors' portfolios. VanEck Semiconductors ETF. This is one I added last month. I've been very interested to see how that has grown actually in the past 4 weeks. There's a bit of a semiconductor shortage in the world at the minute. I don't know necessarily whether that will affect this particular ETF in a positive or a negative way. I suspect a limited supply is probably going to see these companies see a boost in revenue as they fulfill demand. And finally, VanEck Vectors Video Gaming and Esports ETF is quite a mouthful. Another I've talked about on the channel before, and I'll link to the video specifically where I went into this and a couple of other computer gaming ETFs. Computer gaming and esports in general is a booming industry. It is rising and rising and rising. This is something I hope I can add more shares to as time goes by. Again, it's one for the future. This is very much a long-term game for me. Happy to have these guys in the portfolio. So finally, let's just jump across the computer to have a look at return on investment for my Trading 212 account. Okay, so I keep a spreadsheet of all the sort of activity that I do on Trading 212 because their figures are just a little bit weird sometimes to look at. So since records began, around £5,810 has gone into the account out of my bank accounts. These are my investments. Total free shares are approaching £1,000 now, so thank you for everybody who has been using my link in the past. Of course, signups for Trading 212 are sketchy at the moment, and by sketchy I mean non-existent. So I did ask them the question of exactly when they plan to be welcoming new customers customers onto the platform and they weren't able to give me a definitive answer. That's better than telling me something that would later disappoint. So hang in there, folks, if you're looking to get started with Trading 212, it can't be that far away. In any case, total dividends are now over £122, which brings our grand total to 7573, which is pretty good. If we take our paper profit then, based on the stocks and shares that I hold now and include free shares, we're looking at £1,763, which is a return on investment of around 30%, which is great, absolutely great. If we could keep that going every year, we'd be the greatest investors in the world, wouldn't we? Without the free shares, that return on investment drops to around about 14%, which is still pretty good. I'm really, really pleased with that. So here we are in Vanguard. You can see the value there is about £16,053. We're up about £700 from last month. I actually haven't made any contributions to my Vanguard account this month, and that is because I am moving my ISA to Trading 212, as I've spoken about before. So I keep my money for that. I want to make sure I have some money to put into that ISA. So there's no particular updates in terms of deposits, but we'll take a quick run through this portfolio here and we'll see what we've got. So we can see that the personal return here is 19.47%. That's over about a year and a half now. It's been a pretty good time to be investing. Obviously, we've had issues with the pandemic and everything like that, but just goes to show that consistent investing over time is definitely going to help you hit your goals. A total gain there of around £1,800. So if you go into the investments and then a performance tab here, you can actually see how much you have contributed in that period of time and what has returned. This 19.39%, of course, is not a flat return. It is the time weighted value of the money you have invested. So the money that I invested with at the start of this account when I first opened it has obviously been earning more compound interest than the deposits that I made last month. And therefore you get this reflection on how much your money has earned based on how long it has been in the account. Tricky to explain, maybe a tricky concept as well, but basically I have returned 1,800 quid off the back of a £14,000 gradual investment over the last year and a half. It's nice to see the wee graph here. You know, as long as we're going upwards, then we're probably doing okay. S&P 500 hit an all-time high again this week. Really goes to show you can't really time the market. It's best just to keep your investments consistent and regular, and you are going to just let time and the markets do their thing. One of the things that Vanguard is rightly lauded for is their low fees. So if we just move over to the calculations here, you can see everything that's been paid in, what's been withdrawn, what kind of transfers have been. As you can see, I treated my Vanguard with the due love and care it deserves, and I've only been depositing in it. I have sold some of my investments to reinvest in other aspects of Vanguard, and you can see the charges that I have incurred, £17. £17 on 14,000 quid. So when people talk about free platforms and how they're much better because you get to retain more of your money, to have an outfit like Vanguard looking after your money for £17, well, for experienced campaigners like Vanguard, £17 seems a pittance compared to the sort of experience and the offerings that they have. A quick look at the holdings that I have then. Nothing much has changed here. We've around about 10% aimed at emerging markets, with about 6% in the FTSE 100, another 10% in the all-world high dividend yield, and then the bulk of my investing goes in the FTSE developed world and the S&P 500, which hit a nice new all-time high this week. There's a little bit of double up here, in fact quite a lot of double up in these particular areas. The FTSE all world is really what I'm going for. I'm backing the whole world to do pretty well. But obviously I have quite a hefty holding in the S&P 500, which is causing quite a lot of double up in my portfolio. I'm okay with this in the meantime. I have mentioned before that the S&P 500 gives you access to the world's biggest economy in the US. As such, I'm quite happy to hold extra positions in that. If we click on the Insight tab here, it lets you see exactly sort of what you're investing in. As you can see then, 66% of my portfolio is based in North America, and that's because of the double ups in the S&P 500 and in the developed world. Top 10 investments, 4% Apple, 3.3% Microsoft, Amazon, Google, Facebook, Tesla, Johnson & Johnson, Semiconductors, JP Morgan, Berkshire Hathaway. These are all big companies that really aren't going anywhere. Generally speaking, pretty stable. And that's why Vanguard chooses these particular companies in these particular weights. As I say, these figures are slightly skewed because I am investing in them twice because they're held in two different ETFs that I currently hold. As well, you can see the sector allocation is pretty well spread. and we get a return finally on the last 3 months in terms of what you have invested, what you've got back out, and your overall rate of return. 4.78% isn't a bad return for 3 months. You know, there's going to be peaks and troughs. As long as that graph is generally pointing north, I'm quite happy just to take my time and let the time and the markets do their thing. So any questions on any of that, leave a comment below. Tell me if you're investing in Vanguard and what your favorite ETFs that Vanguard offer are. There will be no further Vanguard investing in this particular account this next financial year. I am moving my ISA over to Trading 212, as I've said. There's nothing I'm investing in here that isn't available on Trading 212, so I thought it might be a good time just to try their offerings and see what they can do. Don't forget, if you've enjoyed this content, a big like, please, subscribe, hit the notification bell, share this with some of your friends. Thank you very much for watching. We'll see you in the next one.